All right, time to get going. How are you? Hope you had a nice weekend. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, can you tell I'm slouching? Oh, how about that? I'm slouching a little bit, huh? Yeah, no, it's all right. Just leaning back. Lean back, as they say in Atlanta. Hey, my name is Wayne. I'm a currency trader like you. I wake up in the morning and I trade currencies. The last thing I do is I trade currencies, and somewhere in between I'm trading currencies. That's how much I love it. Pretty amazing stuff. We got a big week going on. Bank of England, Bank of Japan, the Fedsters, the Fedoramas. How's the neck? Well, I'm testing out, luckily I own 2 jacuzzi tubs and a hot tub. So let's just say I'm testing them all out. Money doesn't bring you happiness, but it brings you comfort. So anywho, good opportunity to test things out. Yep. So the neck is getting better. Yep, neck is getting better. Over trading maybe, huh? Holy smokes. Anyway, so thank you for asking. So, hey, it's going to be a busy week. Lots of things could change. The pound has been weak. It could change. The yen has been weak. It could change. And the Fed has been, or the dollar's been strong, and I don't think it'll change. So if it suddenly gets weak, that's just going to allow me to set up some buying opportunities. So, hey, important week. I wouldn't go gangbusters before the news. So really what we're doing is we're setting up trends for next week. So just be cautious, stay small, stay humble. So let me know how I can help. We can cover the techs. We can cover the fundies. That's great. So ask questions, get involved. I hope these live streams every day help. It's good to have a positive routine. In the description below the video, there are links to additional resources. One of the resources is my book. One of the resources are all the different videos that are on YouTube. Now you can go to the youtube.com/FXBootcamp link, and that'll get you thousands of training videos. There's a video training course on Forex for free. You will find over 1,000 videos at the Traders Way YouTube channel, which is youtube.com/tradersway. I've been doing webinars and live streams and chats and presentations and special events at FX Street for almost 20 years. So you can go to youtube.com/FXStreet and you'll find hundreds of videos there. Now, the interesting thing is those videos are 3 hours each. That's an amazing resource. Okay. Again, if you like reading books, my book's pretty decent, I think. Some reviewers on Amazon say my book is the worst book ever written about any subject. I don't think it's that bad, but I'm a professional trader, not a professional writer, so it's the best I can do. So if it's the worst book ever written, it's the best book I've ever written. So I don't know, maybe it's not that bad, but anyways, you can read that book. And of course, we all want a trustworthy, ethical foreign exchange broker with a business model based on service, a symbiotic relationship. If I do well, they're going to do well. And the broker I use is tradersway.com. I recommend them. They earned my loyalty and respect. Maybe if you visit tradersway.com, open up a demo account, they can earn your loyalty and respect. You can click on the link in the description below, or you can just go directly to the website. Whatever. Tradersway.com. So there we are. In fact, I want to go to Traders Way right now. We can start by looking at the stock market, as they say in France. La la la. Ba ba ba. Ba 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 ba. La la la. La la la. But I clicked out. What am I doing wrong today? I have a headache, so what's going on? Why isn't it logging in? I think I screwed up the whole process. No. Is it not going to automatically log me in? What am I? I think I'm having a brain fart today. Well, if it's not going to log in, then we'll skip it for today. I can't figure out what I'm doing wrong. I was just going to check out the stock market. Usually there's an auto login feature, right? I must be having a brain fart. Maybe I just need to do that. Diego says it's down. Yeah, of course it's down. Guzzle some water. Yeah, I got water. Open a demo account. Open a demo account. Anyways, I guess I'm brain farting. All right, so we'll just move on. Of course, the stock market's coming down, obviously. So that's good. I'm positioned well for that. Yeah, do my show from the hot tub. Yeah, I probably could. Currently, these are longer term charts. Dollar relatively strong, Swissy relatively strong. And yen giving back some of its weakness, and that has to do with the meeting on Wednesday night, Thursday morning. Pound has gone from weak to weaker. Today was pretty amazing, huh? I heard God Save the King sang for the first time since, what, World War II? That was pretty amazing. Kiwi down. Okay, so those things have been happening and are still happening. Aussie's still weak, so that's good, and Euro's still gaining. Okay, so very interesting. I don't want to sell CAD, but I see its weakness. I actually want to buy it, so maybe down the line. Starting with gold, oil, and Bitcoin. Shows you risk on or risk off. First thing you can do is look at oil. Okay. Hey, oil traders. Can you figure out what I did here? You know what the gray box is, huh? Yeah. Nice. Huh? Can you see it? Oh, faux show. Oh, faux show. Knuckle, everybody. Boom. Knuckles. Boom. If you're in the live oil trading course, you know exactly what I'm talking about. Jeeb's in it, yeah. Bada bing, bada boom. Well, pray never hurts now. Okay, so anyways, if we look at on a bigger time frame, this is where we are. We're running into obviously a price of interest. That old 81 floor. Remember, the White House told us, even if it was dumb, they told us they would buy at 80. And I don't believe them. I think they said something politically and then didn't understand the financial ramifications of what they said. They said they would buy it at 80. So if they don't buy it at 80, that'll be interesting. I heard a White House spokesperson, I don't know what her actual role was, but she was on CNBC today, and she was telling us that inflation's okay. And they're like, dude, inflation's like 8.3%. What do you mean it's okay? Oh, but it's not going up. It's only going up slowly. And they're like, that's ridiculous. The market's preparing for a recession. The central bank's jacking up interest rates. Inflation's 8.3, and it's okay. And she's like, well, it's only going up. It went from 8.1 to 8.2, 8.3. It's not skyrocketing. It's not out of control. It's totally controlled. And they're like, that's ridiculous. And then she said, Joe Biden's added 10 million jobs since he's been president. By the way, this isn't my political response. This is like CNBC's response, right? They're like, that's also ridiculous. What are you talking about? We were closed for a pandemic and then we reopened. People just went back to their old job. So CNBC's like, you can't claim that as 10 million new jobs. Those are the 10 million jobs we already had. And then she said, this is the first time in like decades that the deficit has dropped, and that's because of the leadership at the White House. And they're like, no. To get that number, all you did was have all that COVID money that wasn't spent, and then you put it back. They're like, you can't count that. And it was really funny. It was really funny. It was pretty funny. Yeah. So anyways, I just thought it was funny. It seemed to me like you might say, well, maybe CNBC is more Republican leaning, but maybe you don't know. Maybe Bloomberg was kinder or something. But it's interesting to take someone that speaks on all the political news outlets all the time, and maybe regular news outlets all the time. But when you get onto a financial news network, they're like, well, where the White House is saying everything's cool, everything's good now. And the financial news people are like, dude, the entire financial market is positioned for a recession. That everything isn't good, everything is bad. So it'd be interesting to see what happens. But it was just funny. You might want to, they'll probably do a news clip of the interview. Okay. Yeah. Well, we're not talking about transitory inflation, Frank, but still, the topic was, the White House spokesperson was saying, because of the White House, everything is better. So they said things like, this is the 96th day that gasoline prices have come down. And thanks to the leadership of Joe Biden, right? Because that's what her job is. But it was interesting to see the news outlet really push back. And they said, well, that's all good, but you're drawing down the strategic petroleum reserve. So when are we going to refill that? And then second of all, oil price or gasoline prices are still 60% higher than when the president became the president. So they're like, because of the president, gasoline prices are down. They're like, yeah, we get that. but it's also 60% higher than when he took office. So which is it? Is it up 60% or is it down 60%? Like, it's down 60% because it was up 120, so it's still over, right? So they're like, look, if you're claiming the one thing, you have to be responsible for the other. So he's like, I could argue gasoline prices are 60% higher. And then, so the response is, well, that's a global phenomenon. Well, then he's like, well, then you can't take credit for the global phenomenon of the price coming down. So anyways, I thought it was interesting. Anywho, let's take a look at gold. Gold is obviously coming down quite lovely, following just exactly what you would expect it to do. The question is, how far is it going to fall? Remember, we were sitting on top of 17. Now we're 1650 on our way to where? Well, we're at the monthly target now. Okay, there's the monthly target, and we've double bottomed on the monthly target. So don't be shocked if 1650 has some relevance for a while, especially while we wait for the Fed to tell us that they're going to continue raising interest rates at a high velocity. The question is, at the same high velocity or at a higher velocity? Well, that type of questioning means dollar strength. So maybe it does zip up, retickle 17, but this time as resistance, and then work its way down. And I would start looking at October targets. And currently October target says 1600. But I'm wondering, like, what if we hit 1600 this month and the next target is really 1500? But that's probably too far out. We might have to say 1500 by the end of the year. Richard says the media minutes will be interesting. Yeah, but they're overshadowed by what's next. But again, I guess the media minutes could say the Fed is worried they've gone too far, but that's like incredibly unlikely. Are these guys paid to mislead retail traders? Which guys? The White House spokesperson would be speaking in such a way that, would support the agenda and the track record of the White House. So they're not misleading anybody. There's two ways to look at it. They're spinning it, but of course they're spinning it. Why wouldn't you? But also from their point of view, that what they did worked. You can't argue that. The SPR was tapped. I mean, a week ago, 2 weeks ago, we had the biggest draw from the Strategic Petroleum Reserve in the history of the SPR. 8.1 million barrels. Is that a lot? Well, we would have had a 5 million barrel deficit if it wasn't for the drawdown. So gasoline and oil prices would be much, 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 much higher. In fact, they added so much oil, if you remember, the API came out 3 million build. A build of 3 million barrels. That's why oil prices came crashing down. They oversupplied the market by 3 million barrels. We would have had a 5 million barrel drawdown. So from their point of view, it's all working. Well, I just don't know what they're going to do in the future. And by the way, if we're already short on oil and they start buying if oil drops to 80, well, then they're going to crowd out everybody else that wants to buy oil. Because, you want to drive your car, so you're in the market. Companies need the crude distillates and derivatives of, stuff that comes from crude oil, whether it's gasoline, diesel, jet fuel, plastic, fertilizer, whatever. We all need a piece of the pie. So there's the market that needs this stuff to survive. So they want to buy it at 80. They want to buy it at 75. They want to buy it at 65, whatever they want to buy. They need to buy. So if the government comes in to replenish the SPR, now they're crowding everybody out. Now there's going to be another buyer. Instead of them adding, they'll be subtracting. So unfortunately, if they start replenishing the SPR, they might find that they're actually going to jack up prices faster than they lowered prices. Also, you could argue if they didn't tap the SPR, maybe they only tapped it as half as much or 1/3 as much, prices still would have come down because the other large consumer of energy, that being China, is essentially offline. So we've already lost demand from China. And the oil they need, they were buying cheap from Russia anyway. So they've been building up their strategic petroleum reserve. You understand that? China has been building up their strategic oil reserve. And we've been adding to supply while prices are coming down. So at some point, there just won't be oil in the strategic petroleum reserve. So if they build it up, then what? And they said they'd start building it up at 80. You see that all of a sudden you're like, wait, that's going to make things way worse. Okay. Okay. So anyways, Frank, what we call that is talking your book. So if you're a talking head on CNBC or Bloomberg, you go on there and, they say, give us a trade recommendation. And they recommend trades they've already invested in because they hope now you come in and buy it and drive up the price of the thing they already bought. They're not going to tell you the thing they're going to buy tomorrow. They're going to tell you the thing they bought yesterday. Hey, Wayne, I noticed that on the same day the Fed announced the rate, the dollar prints a bearish candle. It's happened every time since March. Is there any reason for that? Hey, volatility. That's all it is. Some people, we're front running and are taking profit. And others are trend traders that are looking for that opportunity to get in anyways. Just vol. Just imagine there are 10,000 different traders all trading different strategies. In that moment, they all have to adjust. But on the long run, it all makes sense. Whether a scalper will be long and short trading the volatility. Day traders might be front running the initial, let's say, removal of risk. So very often there's a process of removing risk before the event. Okay. And that might be what you're talking about. I don't know, but you're saying on the same day. Okay. Very often it happens before the event because people are removing risk. And then more often than not, the news comes out as expected because news shouldn't be surprising. So it comes out and people re-enter those previous trades that they already got out on. They re-enter, and those are trend trades, right? You're trading the fundamentals, you're trading the trend, all that kind of stuff. Right now, because of the Fed meeting last week, we lost a lot of volume. Okay, like for example, looking at the COT data, and everybody that has access to my super secret service, you can see looking at the data last Tuesday, when you look at COT and create a risk-on basket of COT trades, if you look at the positioning of the entire basket, not each individual investment, but the basket of risk-on type investments, we lost volume of 2.5%. But on risk-off, we lost volume of 7.8%. Volume came down very significantly. And what is that? risk going into the Fed meeting. And what you'll inevitably see is this week, which won't be reported for 2 weeks, but this week that volume's likely to come back on. So if you used to be risk on, you're going to go risk on. If you were risk off, you're going to go back risk off. Right now, I'm a risk off guy. Okay? I'm triple leveraged short the stock market, and I have been for several weeks. I was at a party at my friend's house on, I think it was Friday night. And about a month ago, he was over here at my place. We were smoking cigars and talking about the markets. He likes to trade like everybody else. He likes to trade. So very often we talk about markets. And I'm like, yeah, I'm going short the S&P 500. In fact, I'm going to go triple leverage short. And so I go to the party now, and he's like, hey, man, how about that short? That's the first thing you want to talk about. So he's been tracking my trade. And I'm like, yeah, I made 5% today. So I was up more than 5% on Friday. And he's like, yeah, 10% the day before. And I'm like, oh, really? Yeah, well, that sounds good. So anyways, pretty funny. So anywho, I'm a risk offer. How about nat gas? This is going to be a great buying opportunity. I'm guessing we are about 4 weeks away, maybe 6 weeks away from this skyrocketing. And you're going to say, well, Wayne, what do you mean? I mean skyrocketing, like from this price, double. You see, look, I already got that there. That's only 12 and a half. I think we can bust that out. We can go higher than that. And it's going to happen somewhere between 4 and 6 weeks from now. And you're going to say, well, Wayne, why? And I say, well, why didn't you sign up for the oil trading course so that you understand the global, the global, I guess, market for natural gas and how it works and how it's different from crude oil? I'm like, you could have done that, and then you would understand, and then you'd know, and you'd be positioned, and you'd be ready, willing, and able, and you know the thing to be tracking and watching. You'd be looking for press releases. So you ask why, and I'm like, I ask you why. Richard's like, yeah, with all these central bank meetings not trading. Yeah, well, that's essentially, I'm kind of just neutral, kind of just day trading. I'm just kind of farting around. It's one reason that we're not doing the oil scalping as a group this week, just with all the Fed meetings and all the stuff going on and, you know, the Queen's funeral and all that kind of stuff. All the stuff gets in the way from regular price action. Okay. So anyways, so nat gas is primed. But the real thing I wanted to look at here, as far as a risk off, risk on scenario, is we're watching this, and if this is falling, the stock market's falling too, and I want to buy a dollar, and we are just pennies away from a cascading crash in Bitcoin. Oh my God. Now we might have to wait to the Fed meeting, and then the Fed meeting creates the crash. Or maybe people just price in what's inevitable with the meeting on Wednesday, and the crash happens before then. But the point is, you have to understand that you're on the precipice. Huh? English word of the day? It's probably French. I just wondered I wanted to know what the official definition is, and it's just funny. It's very simple. A very steep rock face or cliff, especially a tall one. What does it mean to be on a precipice? A very close to a bad or dangerous situation. Yeah, well, that's it. Precipice. How funny. So anyways, living on the edge. So if that drops any farther, get ready for some dollar strength, y'all. Let's take a look at some dollar pairs. Dollar coming down, hitting monthly targets. Here's the front run that we talked about several weeks ago. Oops, let me clear that out. Several weeks ago, we had this as the front run. It's still marked. And here's the target for that trade. That's what we do at the swing trading group. That's Stephen Tyler. Isn't it amazing that he never got along with any of the other guys in Aerosmith? They would write the music and give him the tapes. Then he'd go on his own, write words to it, and then go to the studio and record. But they never even got along. Like, they didn't sit and write it together like a band. It wasn't creative. It's kind of sad, actually. Metallica's kind of like that, right? You get James and Lars, and they write everything else. And then they're like, write the solo. Write the guitar solo in here. That's that. The lead guitar, the bassist, there's no say. Okay, let's talk about, I guess we'll go Kiwi dollar. Kiwi is, again, one of the weak ones. Going back to the recent swing trading meetings. Okay, 2 weeks ago, we were in the swing trading group meeting, and we were in this area. And our plan was to have it come up and then down. There wasn't really much add this week in the swing trading group. You can't really add to this unless, I mean, the only thing you could do is kind of front run it and catch a roll reversal. It's not that great of a setup, and it's hard to catch. I mean, you might have done it. You probably didn't. But at least you're not taking out the previous trade. And remember, this was a scalp after the news. The trade entry was up in here. Okay, so where I'm in is not a good position. And I thought there was a pretty good chance it would do this week and take me out. But this is just the post inflation scalp on Tuesday. The real trade should have been in here. So I would mark that as not a great trade, but I did it after the news. And that was the first day I woke up with, like, I couldn't lift my own head. So poo-poo on me for, I don't know. Okay, euro dollar, again going back into time. There's the entry that was planned. Perfect little move. And we haven't even made the lower low yet. Now, if you're a bull, you're probably eyeballing this area here. Let me do this as best I can. Let me do it this way. Okay, you're going to grab this low and you're going to grab that low. Okay, so bulls are trying to buy or have tried to buy that for their inverse head and shoulders play. So this is what a bull is thinking. I'm a bear, right? I'm a bear. So I'm thinking like this. There's going to be a bit of a battle, but inevitably the fundamentals win is the idea. Okay. Going down, ba-bam, 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 right? But you got to understand the battle that's at play. Okay, so pick your poison. I think this could really fart around for quite some time, where I think what we really get is something like this for a while and then down, or even just sideways, sideways, sideways until November. And we do this and this and this, this. And then we get, third week of November, and then finally we get our breakout. And around then I would expect to be flipping, but technically I can't flip yet, even though I'm projecting in the future. It's still a hypothesis. Fundamentally, it doesn't make sense yet. I'm only that's a seasonal play. And the third week of November, I predicted back in January when I did the 2022 outlook, where I planned every single month for the entire year. And while I would say it's not perfect, and I certainly made mistakes, like I didn't think China would be locked down again, I could also argue that I certainly haven't been wrong. So right now, fundamentally, this is down, and I'm tracking the technicals to remain bearish. Okay, I guess I should draw it this way. So a linear regression here, or linear, progression, projection. I would look at it this way, and because I'm tracking the fundamentals and they make me bearish, this trade is still valid. The one that's already marked there from before. Okay. Now remember, this rectangle box area was pre-news, was pre-inflation news, which happened almost a week ago. It was like we had this and we had this at the time, and that was the sell zone. Okay, so now we could argue that we're in a role reversal here, but that's a bearish point of view, and it's dangerous to only have a bearish point of view when you're a bear. So that's why I bring this to the table and say, well, the bearishness is already in place. If you're already a bear, you're already a bear. There's nothing to worry about there. Bears need to be worried about what the bulls are going to do next. And so right now, what I declared last night, because the day trading group meets on Sundays, what I said last night is I'm still bearish, but neutral. I'm effectively neutral to bearish, just waiting my turn, especially on euro. Okay. Okay. And then again, we're waiting. Okay, we're waiting for Wednesday on this one. Okay. What do you think? Pivot points are random, right? Random. Trading is random. You can't predict the markets. They're total chaos. They're unpredictable. There's nothing you can do to understand the markets. This is what people preach. It's all random. Really? That doesn't look random to me. So anywho, we're into the moving averages. The thing is, this is fundamental, and we're waiting for this. Okay? We're waiting for Thursday, which is Wednesday night here in America. Okay, euro has been relatively strong, so obviously going to do better. Are you going to kick it off to the 55 is your big question. Look at this. I have it all marked out already. We did this last week. Uh-huh. You guys play Minecraft? Hey, we're in the cloud. I don't know what it means. It was probably important. Okay, maybe waiting for that 21. Could be a rabbit, could be. I'd like to see this one work out to the upside. We topped out on the monthly target. Okay. But we're at an area, maybe I can stink about it. Now, the moving averages are like, not so great. But I'm looking at this area as a role reversal. So wink, wink, nudge, nudge. Remember, you're clearing. You're clearing, what, 3 1/4? Actually, I think you earn 0.1 on that carry. So it's currently neutral, which I like. Over the last 20 years, typically it's going up. Now, I know it's not going to happen this year, but it's not headwind either. Look at the inflation differential, 7.6 in Canada, 2.6 in Japan. Interest rates 3 1/4 in Canada, negative 0.1 in Japan. Look at that, 3.35 interest rate differential. Bias towards CAD, just beautiful. COT positioning, favoring CAD. 75% are short Japan. and 60% are long Canada. However, retail is still heavily short this pair. So there's going to be some stop hunting. So now that we're neutral, this is what I'm suggesting. Now that we're neutral and 80% of retail is short, where's their stops? Here? 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 Well, I think the top one is too far away for retail. So we probably have, stops in here, stops in here. Okay? And so there could, again, I can't predict this. It's something that I'm looking for. It's a hypothesis, aka a trading strategy that needs confirmation or rejection. But it could be an interesting play if we're hunting those retail stops. Again, 80% of retail short, 60% of institutional is long, but what if that goes from 60 to 70? Could take this sucker out, right? So that's the basis of a strategy based on quantitative analysis of, in this case, positioning, not just fundamental analysis of economic data, but we're also looking at fundamental analysis of flow. We looked at the fundamental analysis of seasonality. And all of it says, okay, there's some upside potential here, but this market is currently neutral. So now we have to think ahead and say, well, what if it goes from neutral to bullish? How would it play out? When would it play out? How do I play that out? And maybe that has something to do with the BOJ meeting. Maybe this has something to do with the Fed meeting even, whether it's risk on or risk off. What do you think of that logic? Well, that would be bearish, Frank. So what we want to see, Frank, would, if you're a bull, and that's of course what I'm talking about, is a breach. And suddenly, a new, right, what we call a change in trend, right? So it hasn't happened yet, nor does this chart say it's going to happen. But I marked this purple zone a very long time ago as a place to consider rebuying this pair. Technically. But technically that hasn't happened. If it was technically happening, then we would have we wouldn't have neutrality. Right? We wouldn't have neutrality. So like, for example, which one were we looking at? CAD yen. Yeah, so I want to be long CAD yen. Okay? But I can't because it's technically bearish. Where's my CAD yen? I can't look. Let's do CAD. There it is. I can't be long. Oh, and it's not going to display properly. No, too bad. I didn't even pull it up properly. Maybe that's what it was. What the hell? There it is. There we go. All right, so this is CAD yen. As you can see, I'm neutral. And we're analyzing the market. And this is based on daily candles. And it's kind of eyeballing what I'm eyeballing, which is interesting because I thought this was going to be the other way. But this, I hate to say it, agrees with me. Because when you're analyzing, you do linear analysis of up, and then some down, and some down. But it's still a higher low, okay? And now it comes down to how does this play out? Okay, so you got that, but what you want to do then is bust out your average. Okay, and then there's some projection, a base case, worst case. And that kind of agrees with me, which I wasn't expecting. I thought this would be pointing more down than up. So, all right, good for me. Okay. So it's looking at the fundamentals first and foremost and waiting for the technicals, because technicals are still this way, you see? So as soon as this goes this way, this will go to bullish, because it's analyzing macroeconomic data, it's analyzing seasonality, it's analyzing positioning, it's analyzing interest rate differentials, but it's also analyzing technical analysis. And that's why it's neutral. It's like, hey, this pair's falling. So wait. So that's great. That's helpful, because I'm already sitting here doing the exact same thing, going, I want to buy at this price, and now I need technical analysis to confirm or deny my hypotheses. So I just got to find my price. Today's day trade is to buy in here on my support level. We've even retested the support level. And now, what do you want to do here? Plan A was buy here at 107.50. Plan B, I suppose, if you're going to day trade this, is the trap and break strategy. Cool. And that would be sort of like a first one in. Remember, there's only 3 ways to make money in this market. Be smarter. Hey, I'm trying. Be first. Hey, I'm trying. Or cheat. Well, maybe having more, maybe having better intel is a form of cheating. That's not fair. How come you know all that stuff? Right? Once again, the way to win as a trader is to be first, which a little bit of degenerate gambling, right? Be smarter. And by that, when you're smarter, when you have better rationale for your investment strategies, it's not that you're in first, because I find that more dangerous, and in fact, very often you're gambling, but instead staying in your trades longer. Right, Anthony? So the goal isn't to be first. The goal is to stay in longer. And the only way to stay in longer is to understand why the market is moving, why the trend is presenting itself, and going along with that. Riding the endless wave, right? You want to ride the wave all the way to the beach. Yeah, it's a quiet movie, isn't it, Danny? I keep waiting for like Bruce Willis to break in. There's German terrorists! Yippee-ki-yay, motherfucker! Anyways. Yeah, that would be great, especially if they made a G.I. Jane reference, because his ex-wife, who was G.I. Jane's in the movie, but Bruce Willis has alopecia, and so it's like a double joke, a joke inside of a joke, which is in of itself a third joke, because you're like, wait, and you're like, wow, that's a complicated joke. And you're like, I know, right? All right, so I think we're done here. I think we're good. Hungry, got to eat some soup. So I'll bid you adieu. Thank you for being part of this community. I appreciate you. I appreciate the positive energy that our crew has and what we do. Oh, look at that. I didn't get hit. Hey, hang on. What? Oh, man, I missed my entry. Hang on, I got to try it. I missed my entry. Sorry. So anyways, I appreciate you. I appreciate the positive energy. You know, sometimes you just don't want to roll out of bed. But you give me the strength to do what needs to get done. So thank you for being part of this community and part of my life. I think we make the world a better place when we work together. And don't be shy. Let me know how I can help. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tonight if you're in my day trading group. And for everybody else, I'll bid you adieu. Oh, and for everyone that signed up for the 3-day oil trading course, guess what? It's still open. I've given you several more days to finish the course. So if you burned through it as best you could and didn't quite get through it, dude, I get it. It's at least 15 hours of material. So what I did is I extended it so you have a few more days to either finish or go back and watch some of them, because they're dense, huh? It's a lot of material. Like, it's no joke, a lot of material. So I hope you enjoyed watching it as much as I enjoyed researching and presenting it. All right, that's it. Get out of here. Go.